Hi, this is Zach Meir from Zach's Traders Cafe with a look at some bulletin board hero stocks for Monday the 6th of June. Starting off with the media group, and you can see there's been a rising trend channel here in place since April. Golden cross buy signal last month between the 50 and 200 day moving averages, and then progress above the 20-day moving average at 27 pence. That's the grey line. Above that and the floor of the April channel, looking for its target as high as 60 pence over the next couple of months. And not really much more to wait on. We've got the RSI support as well, so it's just a matter of how much further consolidation is required around current levels before we head higher. Obviously, the big resistance here is the 40 pence zone. You could notionally draw a resistance line there running through around 34 pence, and that the triangle break would then take the shares up to the 60 pence zone. Next up, a stock I haven't looked at for quite a long time, in Spirit Energy. Here we've gapped back down below the 200-day moving average at 0.48 pence roughly. But the big technical news at the moment, really, the way that we're currently resting just above this uptrend line from last September at 0.4 pence. Ideally, that would be held. And really, you've got a bottom fishing opportunity here while there's no break back below 0.32, which was the initial 2016 resistance. Obviously, the target while we're above 0.4 is up to 0.57, which is that October resistance line, above which then the shares could really start to move up quite well. RSI at 20, so very oversold at the moment, which may help get some momentum going over the next few sessions. Next up, another stock which has been slapped a bit of late, and that's Independent Resources. Just starting to improve now with the RSI breaking up through the neutral 50 level, the highest it's been since the beginning of April. Just need really now an end of day close above the 50-day moving average at 0.09, let us say. If we can get that over the beginning of the week, then a journey towards the top of a rising trend channel from the beginning of the year, and the 200-day moving average at 0.39 pence could be on its way. Obviously, that is a long way away at the moment, so initial target 0.15, 0.16 would be acceptable over the next month or so. On to stock we haven't looked at for quite a while as well. That's Kimberley Enterprises. Here we've got this consolidation above the 200-day moving average at 0.34 pence, and also at the floor of this rising March trend channel. Buy trigger here, an end of day close above the 50-day moving average at 0.74 pence, and that could take the shares up to 0.18 pence over the following couple of months. Stop loss back below the 200-day moving average at 0.34 pence. Noricum Gold, a great favourite amongst many private investors, hasn't quite delivered so far, but it looks like it's starting to deliver at least in an initial sense. Here we've got the break. We had the break above the 200-day moving average at 0.13 pence for the beginning of April, and we've actually remained above that ever since. All we need now, really, after this consolidation at 0.15 is to break the 50-day moving average at 0.16, and that could then give us a retest at least of last month's resistance towards 0.23 pence, and then up to the 2 to 3 month target as high as 0.33 pence, which is the top of a rising May 2015 price channel. Stop loss back below the 200-day line. On to a stock which has been a rather rough ride, let's say, of late, Encondezi Energy. Basically, we had the initial push through the 200-day moving average, which was very positive indeed. In fact, we haven't actually been below the 200-day line since we broke above it in December, which is normally a very strong signal. It may still prove to be a very strong signal, but given the rocky ride, the rough ride that we've had over recent months, you probably want to wait to see an end-of-day close above the 50-day moving average at 4.65 pence before targeting 9 pence at the top of that broadening 2015 formation. On to Oracle Coalfields, which has been gradually moving up, pushing up over the recent past. The big buy signal here was October's gap through the 50-day moving average around 1.5 pence, and really we've held that zone ever since. We've never filled that gap, which is a big plus, and also since then we've basically held the 200-day line. In fact, I don't think we've been back below the 200-day line either. So very strong overall backing for an upward move, and this latest break through 3 pence, very constructive indeed. In fact, while there's no end-of-day close back below the initial May peak at 2.67 pence, one we'd be looking for at least 4.5 pence at the top of that rising 2015 price channel. Finishing off with Petrel Resources, extended base here that we've had. We had the initial break of the 200-day moving average in October, bounced to test the 200-day line at 3.33 pence as new support after that, and then the golden cross buy signal in March around the 3.5 pence level has come up with the goods, in the sense that the shares have effectively doubled since that time. The view now is that, at least while there's no break back below the initial 5 pence June resistance, we could head as high as the old late 2013 support at 10 pence over the next couple of months. So pretty strong turnaround, U-shaped reversal there for Petrel Resources. That's it from me. More updates at the same time tomorrow.